Mr. C.S. Reddy, MD and CEO, APMAS, to join us on the stage, please. Can you all give a big round of applause? And now I request our speaker, Mr. Venkatesh, MD, IIFL, Samasta Finance, to please join us on the stage. And now I request Mr. Sadaf Sayeed, CEO, Muthoot Microfin, to please join us on the stage. And now I request Mr. Amit Arora, Senior Rural Finance Advisor, World Bank, to please join us on the stage. I request a speaker, Mr. Mohit Rana, CEO, Infomerics, Analytics and Research Private Limited, to kindly join us on the stage. I request a speaker, Mr. Deepak Srinivas, EVP, Kaleidofin, to please join us on the stage.
To have kept everyone awake, alive. So I think at the outset I want to thank Gigi and his entire team for this innovation of having a South India conference on financial inclusion. So big round of applause to Gigi and the entire team. This is really good, and I was impressed by the number of participants and the number of speakers. So I think it's kind of was competing with the national event. I also thought this afternoon session, by the way, we all love this word innovation. Under innovation, we can do a lot of things. We can do mistakes, fail, and maybe learn from those mistakes. Having been in the sector, the so-called financial inclusion, microfinance sector for now, I would say, maybe I'm getting old, 30 years or maybe 33 years. The time I started with CARE when we were doing self-help groups, almost 89. So I think this is kind of, in a way, learning from South is also very appropriate or apt, because a lot has happened in South India. And because the reason why it has happened is because they're always ahead in the game. By the way, Vijay Mahajan came all the way from the north to south to start, basics. I first actually met him on a flight when he was coming to Hyderabad, and 96, I think they kind of started basics. And our Guruji, Al Fernandez, I think way back in 1987, they started this so-called alternative to the cooperatives or the PACs, the self-help groups. I think he hates us call them as self-help groups. He uses the word self-help affinity groups, SAGs, because the affinity is the glue that binds them together. So I think in these 30 plus years, and by the way, the SAG bank linkage already celebrated its 30 years of, 1992 being the first circular of the linkage banking model by Reserve Bank of India. So I would say in South India, a lot of innovations have happened. Whether it is the SAG bank linkage, whether it is the the starting of the microfinance institutions. By the way, microfinance institutions, for some of the newcomers, the youngsters in the room, many of them started as NGOs, and then they transformed some of them into the NBFCs, and then some of them transformed from NBFCs to small banks or, regular banks. So a lot of, that kind of innovation has happened. And I'm sure the panelists will have a lot of ideas and points to share. But the topic has the second part to it, which is about impact. I think we all can talk about innovations, what have we learned from it, how did we achieve the scale and the depth. But impact has always been a question which has been difficult for us to answer. I think we have anecdotal information and some evidence. The fact that financial inclusion has reached, we are kind of near universalization, 85, 90%. And I think in the morning, the CGM of RBI mentioned the index where we are now at 56%, which is about having an account and using it as per your need. So I think, when I ask the panelists, maybe I would want them to talk a little more on the impact, also on the innovations. But I was just making a quick notes, and I thought of just mentioning a few innovations. And by the way, in the morning there was a mention about the Andhra Pradesh crisis. There aren't too many people in this room from Andhra Pradesh or Telangana, simply because we don't have any microfinance institutions functioning there. They were obliterated in the year 2010, some 12 years ago. But some good news to all of you is that the Telangana High Court, and that didn't come in your paper, by the way, Gigi, the paper didn't touch it. Oh, okay, the paper could have been amended. So,
I thought it didn't come in the AP newspapers.
no, it appeared. No, it covered English papers at least, yeah. Yeah. So the good news is that the Telangana High Court has said that the Money Lenders Act, or whatever the AP government, which is now AP and Telangana, is kind of not allowed. So to that extent, they have set it aside. And I think Salemat wanted to see the court judgment copy, which I am sure we can find online. So I think, in a way, the Andhra Pradesh crisis, in my opinion, is also an innovation that gave us huge amount of lessons, because I was witness to the microfinance crisis in Andhra Pradesh during 2006 to 2010, when tremendous effort was made to address some of the issues that the CGM of RBI mentioned in the morning, of exorbitant interest rates, exploitative practices, coercion in the kind of recovery that was done. And if anything like that is happening today, I think we should still reflect and see that our practices are more ethical and appropriate, and not at the cost of the poor. So when I was trying to look at some of the innovations, I listed down 5 at least. I'm sure our panelists will talk more. One is Basics came up with this so-called sub-K as the business correspondent. By the way, the business correspondent model itself, which at that time we picked up from South Africa model. So there they called it as business banking correspondent, but for some reason in India we called it as business correspondent, business facilitator. So sub-K, I think, has been a huge innovation of being a corporate BC, and it has done tremendous amount of work. The second innovation many of us don't talk about is the Sangamitra Rural Financial Services, which has done tremendous amount of work silently. Even today it continues to function. And it lends to self-help groups that the banks refuse to fund. And they went to different geographies based on the need. So Sangamitra Rural Financial Services, I think, is an innovation. Some have replicated, but it continues to inspire people. The third, again, we had our CGM from NABFINS here in the morning. I think that was an innovation of lending to cooperatives that are involved in agriculture, value chain development. Also to the SHG federations that they have done. The fourth is, again, it's missing from the white paper or the Srinivas Financial Services. Today, their portfolio outstanding between Andhra and Telangana is around 10,000 crores. And it was in response to the microfinance crisis. So to address that particular gap of MFIs exiting the scene, the Srinivas Financial Services was set up. Today, they lend in 48 hours using technology. And that innovation, I think, is now gone to many countries. Many states are replicating, so MFIs, watch out, they lend at 11 or 12%, the cost to the borrower through the self-help group, but it's almost an individual lending. And the loan is up to 3 lakh rupees for an individual. So it is an emergency loan as well as an enterprise finance using technology, including iris technology. And so in 48 hours, the loan is in your bank account. The fifth, which is more recent, it's kind of coming up, Finserin Online Financial Services, which is IndusInd Bank partner, where they are doing, I think they are now talking to ESOP and other, SBI and other entities. So the point I'm trying to make is that a large number of, innovations have happened. I would also like to mention that in South India, a lot of failures have happened. In fact, I think all the so-called SOPs, the standard operating procedures for the rest of the country were, or maybe even for the rest of the world, were developed based on the experience and learning from South India. Some innovations are small, some innovations are big. And I'm glad that we have this very, power-packed panel right after the, lunch. And I'm hoping that each of the panelists, so we thought we'll maybe do 2 rounds, if that is kind of possible. And if each of you can keep to time, maybe 4 minutes to begin with. Basically touching on these 2 aspects of this session. One is about innovation, second is about the impact. What has been your experience and what's the kind of learning that we have. And I'm sure many of the participants in the audience are looking for certain specific examples. So I would like the panelists to be as specific as possible. I'm sure you have specific case studies or examples to mention where these innovations have happened at scale. Because now we are talking about scale and we are talking about universalization. In the morning, there were a couple of points mentioned. I want to just highlight those for the panelists. Number one, are we into enterprise promotion? So we cannot be talking anymore about pickles and poppers. And, of course, livelihood finance continues to be important, or consumption smoothening. But I think more and more focus on enterprise financing. That is one thing that I thought I'll mention. Second, the transparency in the entire product design, in the transparency to the borrower. And maybe the third point is it only about loan or is it about finance, which includes savings, insurance? I think there was a mention by the CGM of RBI about the importance of insurance. And the whole idea of of course, now money transfer has become so easy. Now I think everyone is able to use their mobile and then use the UPI for making the transfers. So I guess maybe I'll stop there, and I would request, is there a particular order that we would go, or we just go by the order in which we are sitting?
You decide.
Yeah, we'll kind of start from my right. So each of you take like 4 minutes and be as specific as possible, so that we have a little time for the audience to also make comments or ask some questions. So Mohit, over to you.
Good afternoon to everybody. So thanks Sa-Dhan and various dignitaries for inviting as a panelist. So rightly said by Mr. Reddy, there has been a lot of innovations, and let us talk about the innovation, but duly what impacted. So I represent a company known as Infomerics. Infomerics belong to family on credit ratings. So credit rating, it is one of the pioneer in the credit rating space. So we are subsidiary, this Infomeric Analytics and Research, it is a 100% subsidiary of credit rating agency. In terms of the innovation, how Infomerics has contributed to the MFI society. So we have a product called MFI grading, the COCA assessment. So we have developed a model after this after this COVID crisis. So the model what earlier used to a rating agency or a subsidiary of a rating agency used to follow, they are more or less they are not dignified to the current scenario. So we have developed a model specifically in taking the sector, what is the current standing in the market, how the payments are being made. So that makes a more kind of a robust approach what is happening to an MFI. So we have developed in such a manner where everybody gets a good grade if he's complying on towards the compliances, if he's complying towards lot of things. So that ways we have been grading the MFIs. Similarly on the code of conduct assessment, this COCA, so it requires lot of detailed analysis towards where lot of synergies need to be maintained for MFI. So that way, that is very a delicate topic. So I will not go into that deep. So, but eventually, you adopting all those practices, that is eventually giving benefit to the MFIs. I'll share an example to Reddy sir. Sir, we did a pilot of some 20 odd companies. They are having asset under management between 10 odd crores to 100 odd crores. So we have done a pilot after having this methodology. Sir, if we compare on the previous approach and the new approach, previously all are at a moderate kind of a scale. So on moderate scale, there is a complication from a lender that you have to get yourself graded under this 1, 2, 3, 4, 5 top 3 gradings. But provided the new methodology what we as Infomerics has adopted, so obviously they are coming on a high or a moderate kind of a scale, so that at least that on the lending institution side they are much more safer and they are getting the funds. So we are channelizing that and we are becoming an analyst between a financial institution and the party. So there is a win-win situation for everybody. So that's one advantage what we have done so far. So this has been not a big journey you can say, but obviously in last 1.5 year, so we have assessed close to 90 odd MFIs as of now, and people are all we have got lot of good testimonials from the client as well. So we are helping the society in that manner. Similarly for micro enterprises, sir, we have recently launched a product called iDigital. What is it iDigital? Nowadays for a small entrepreneur, so it is very difficult to access the get the marketing and websites on their link. So we are helping all those companies to get themselves verified by a recognized agency like Infomerics. They get themselves registered over our platform, and then we give a small website to them where they can showcase their profile. So obviously when you go to any lender or banker, lender always asks, or any financial institution asks, tell me your credentials. So they don't know how to represent all those things, specifically the mid-size one. So we help all those companies to make them digitalized on the platform, and we are charging very nominal cost of. So if we rationalize the process, currently making a website will cost you around 20,000-25,000 rupees average if I talk about. But eventually with our service, so we are helping them. Thirdly, since morning we have been talking about this ESG, what is how to do sustainability. So again on that front we are providing an advisory service to all MFIs, because we have to make sure that we should compare an apple with an apple. We should not compare an apple with an orange. Specifically to this sector, the problem is the larger chunk of the people are getting access to the funds, but the middle ones or the lower ones, they are not. That has been the basic major challenge what is happening so far. So if one agency or any MFI, so one has to get into all those compliance or sustainability kind of, so one has to start the process right away. So we help the companies in that front to get their ESG. So it is not a one-day process or a one-month process. It takes time to evaluate from day one. because in that there is a gap analysis which has to be maintained. There are certain factors which needs to be maintained. So if if any smaller or a bigger company has that aim to achieve, so definitely sky is the limit. We can be helpful to them to make them handhold them, to make them understand that how this achievement can be made.
So I think 2 points. One is about this code of conduct assessment, which I think is something is a very seminal contribution that Sa-Dhan has made to the sector. And second is this whole enterprise registration, digitization. And you have done this in South India, some of it, yeah. Across India. Okay. Thank you. So we'll move on to our friend Sadaf and briefly share your ideas related to innovation and the impact. Thank you.
Thanks a lot. Good afternoon, everyone. First of all, I think I've been associated with Microfinance for close to 2 decades. I think this is the first seminar of Microfinance which I'm attending in South, and which happens to be our home state. So I'm very happy to be speaking here. And congratulations to Sa-Dhan for organizing this. Reddy, I've been associated with Microfinance pre-Andhra, post-Andhra, and the new avatar which is there. And you spoke about the role legendary Mr. Al Fernandez, Vijay Mahajan, for that matter, like not to forget Vijay Lakshmi Das, Jay Sri Ben, all of those who played, and some of them in the room, Mr. Paul Thomas and Chandrasekhar Ghosh, all of them played. I think a lot of innovation has happened, lot. If we are talking about the time before AP crisis we were talking about, I think as we speak, necessity is the mother of invention, and every time we have faced a crisis as an industry, we have come together and we have innovated and we have found a new way to do business. If you talk about before Andhra, the operating rate of interest at that point of time was in the range of 36 or 40% kind of an interest rate. And it was unimaginable to kind of lend loans at around 26%. People had an operating cost of 15% and borrowing cost of around 14% and some margin over it. So it was unimaginable. But obviously there was a crisis and there was a regulation which was put in place, a 26% rate cap was put in place. There was a lot of innovation that the industry did, and hence the operating cost came down. And today we have institutions which are operating at a 4.5% operating cost or a 5% operating cost. It is because of innovation in technology. It is because of rationalizing cost and ensuring that all the excess is cut. I think still people are profitable and running. So that's one part of it. I think overall, if you look at in the process, the innovation that has happened and that's meaningful and that is going to take us forward is the biggest innovation in the credit bureau infrastructure. If you look at before Andhra, there was like institutions were operating in silos. All were well-meaning entrepreneurs who wanted to make impact at the bottom of the pyramid, but there was not cohesive approach. So there was a chance of an Andhra-like crisis because you didn't know what I am lending versus an X entity lending versus a Y entity lending. But when the crisis came, all the industry came together. At that point of time, I was a part of that discussion. I was in that room when we reached and approached all the credit bureaus. CRISIL at that time, CIBIL at that time being the main credit bureau to kind of provide credit bureau reports to microfinance. Frankly speaking, unfortunately, they were not very keen because it meant a lot of work but very little revenue. We then strategically decided to invest in a company called Highmark, today known as CRIF. And we told them that this will be exclusive kind of a database for microfinance. So now you have two databases. One is the microfinance database and one is the consumer database. So you get a very good report on microfinance. And nowadays, since the new regulation has come in, you can get a report at a household level also, not only at the microfinance individual level, but at the household level, other members and also. So that's a great tool and a great innovation. The second innovation happened at the time of crisis again, that was demonetization. I think prior to demonetization, to disburse directly into the customer's bank account, I think it was unimaginable, like to do 100% of it. Yes, some efforts were being made. Our organization was also making effort, but 10% or a 15% of the disbursements were happening into directly bank account of the customer. But overnight, there was a clampdown on cash, or there was no option but to disburse in bank. So everybody adopted, and today if you look at it, almost 95% of the disbursement happens directly into the customer's bank account. Of course, government has played a great role in it, creating the Jan Dhan, Aadhaar and mobile kind of a trinity in terms of the tech stack. That has really helped us. I think that will actually take the microfinance, I think, initiative forward. I call today what we are living in the microfinance space is the Microfinance 3.0. The first version was before Andhra, the second version was after the Maligam committee recommendation came in, where you have SFBs also coming in later on, and then one of our MFIs getting a commercial bank license being Bandhan. Now this is another era, a Microfinance 3.0, where kind of a liberalization of regulation has happened from regulator, and they have understood that these are entities which are key stakeholders in the rural infrastructure, and they play a great role in taking financial inclusion forward. And by the way, financial inclusion from the traditional definition of it meant not only credit, it meant savings, it meant financial literacy, it meant remittance, all of these product put together, insurance, all of these product put together. We have been really good in taking credit to the doorstep of the rural household. But again, rest of this, some by virtue of regulation, some by virtue of our own interest have been left behind. So these are the things which have to be focused on. As an organization, we have innovated. We have created products like saving products, which is within the ambit of regulation. We have created a product called Swan Varsham, where a customer is allowed to buy gold coin, earlier gold coin, now gold ornament, in installment. Every month she pays a small amount, and by end of the tenure of the loan, she gets a gold ornament of her choice. And that's a kind of a saving that she manages. In India, in a rural household, you can't explain a mutual fund product, you can't explain a kind of a insurance product, but definitely gold is something that you can easily explain. So that is the kind of innovation has happened, but a lot more can happen. On the insurance side also, I think one of the essential need today, and I think in the morning, I think the representative from SBI or RBI spoke about that natural calamity insurance is absolutely necessary. Now we are seeing events everywhere. Unfortunately, I think southern states have been a kind of a recipient of the worst of them. Like we had 2018 Kerala flood, which was very devastating. And from there on, we realized that, natural calamity insurance kind of a product is not a kind of add-on. It's a necessity. More important than the life insurance product is a natural calamity insurance product. So something we have innovated with some of the insurance company and given it to our customers. We have insurance with Magma HDI and we have insurance with Chola DBS. So we provide that to our customers. But these are the things which are needed for our customers. Apart from that, I think a lot of innovation needs to be done. From financial literacy, we are moving towards digital literacy. Earlier, we used to take pride in kind of getting our customer into the formal financial institution net, getting her first loan into the regular financial institution. But now our responsibility is to get them digitally included. So we have an initiative where we educate our client how to do digital transactions. We have an app. Out of our 2.6 million customer, 1.2 million customers have that app. And those customers are transacting digitally on that. Almost 50% of them are transacting on a last 3 months regular basis. So that's what is, I think, is happening. And a lot of innovation is happening, and I'm sure it will take a lot of things forward. The most recent initiative, I think we are talking about moving towards entrepreneurial finance. All those 50,000, 10,000 rupee loans were good, but now if the customer has to really have an impact in life, they need to get some sort of a loan, which I think somebody called as a missing middle, between like 3 lakh to 10 lakh kind of a loan. Prayas is a good option that SIDBI has created, but I think the better deal that SIDBI has created is the unique identifying number that is there, which you call, I think, Uddami number. I think that with that number, if we are able to provide credit and underwrite a client, and we are able to provide right credit to the right customer, definitely they'll have a more impact, not only on entrepreneurial journey of a customer, but also creating jobs around that. So I think a lot of things are happening. Maybe I can talk about the impact on the return when we speak about that.
Yeah, thank you. I think I like the idea of financial inclusion version 1, version 2, version 3. And I guess the innovations oftentimes happen when there is a pressure to do it. If it is too relaxed, then so I think we converted every crisis into an opportunity. Whether it is the Andhra crisis, whether it is the demonetization crisis. Even I think COVID taught us a lot of lessons and hastened this whole process of digital transactions. And also the customers were forced to, move in that direction much more than the institutions themselves. And I think, this whole idea of, the technology, making that possible. I guess, what people are talking about now with the artificial intelligence, I think next 2 years is going to be revolutionary. I believe with the chat GPT, or I think, you say, please write 5 lines about FPO, it'll produce you in like 30 seconds. And, so I believe the next 2 years are going to see a revolution that we have not seen in the past 30 years maybe. Okay, we move on to the left. So I request Venkatesh to keep it to 5 minutes and share your thoughts, please.
Good afternoon, everyone. I thank Sa-Dhan for this session in South and having me on this panel. In terms of innovation, I mean, Sadaf had mentioned that there were many points where we had to innovate. I mean, we had Andhra crisis, we had demon, we had recently the pandemic. So, I mean, more inward looking in terms of what we have done in terms of looking at Samasta, in terms of where we could innovate and think. If you look at how we have been able to better our credit conditioning when we onboard customers, that was a very important thing, which especially after the new regulations which have come in force from April 1st, 2022 onwards, we were able to get in more detailing of our customers, and we were able to bring in a lot of more decisioning. And also we used our credit bureau data. We were able to pre-populate it onto a Google map, and we were able to figure out whether we want to source, and we gave more granular detail to our staff to making sure that whether they want to source in that area or even at a very village level, we were able to give them that kind of a granular data in terms of things. So, I mean, because onboarding of a client is a very, very key aspect of it. So we were able to look at that aspect of it, and it's definitely giving us in terms of an innovative step. Also, it's impactful in terms of we are getting better quality clients on board, and we are not overboarding clients on with excessive loans and all those things. And if the other point, if you look at it, is the monitoring aspect of it. We have been looking at couple of things which we have added on in terms of monitoring of, given the field staff are spread across the length and breadth of the country, we're able to monitor better with innovative apps which have been in-house developed and which we are able to monitor. Even if they collect within a couple of seconds, they need to immediately update, and we are getting the our collection details up on thing. So that's another innovation which we have done, and is definitely making an impact. And on the product side, which we have added on, we have constantly looking at new products where we are able to assess the loan utilization. So one of the key products which we have bought in scale is the dairy cattle loan product, which we have quite a substantial portfolio under this. So and we have been working with we have been working with companies like Dwara, which have helped us in terms of scaling up this for things. So innovation in terms of, we were able to bring it in terms of when we were able to onboard clients, we have got an innovation in terms of better credit decisioning, so that clients are we get better clients, and we are not overburdening clients with excessive loans. Then the other one is monitoring, and the new product lines, which we are ensuring that the loan utilization is there, and the maximum impact can be created with our thing. Thank you.
Yeah, thank you. I think particularly product innovation, I guess with maybe technology, things become more easier. And I like the idea of, moving into more the app-based. In fact, I don't know, we haven't really heard many people talking about eNash. So now I think the payments are kind of also, can be made by the borrowers much more easily without, too much of loan officers going out to collect those loans. So I guess more technology orientation. You mentioned about the cost of lending or cost of operations as 4 or 5%. Srinidhi operates at 1.5% as a financial intermediary. Of course, they have the SHGs and the village organizations and the cluster level federations that help them. But still, I think using technology, they've been able to show a tremendous possibility of keeping the costs very, very low. So now I'll move on to Amit.
Thanks. Since I'm not a practitioner, I will not get into the specifics of the case, but you gave examples of certain innovations which are institutional-led models. Where I think as a nation we give ourselves less credit is innovations in terms of regulations / policies, and also innovations in terms of products. So depending upon how far we want to go back, RRB was an innovation, and fairly impactful innovation, at that point of time, and it continues to be still relevant. In fact, I was recollecting in the morning, Mr. Shaji was here. He happened to be in the Kerala Grameen Bank chairman. If you look at the balance sheet of that bank, if that bank is a private sector bank, the valuation that it will command will be very, very different from the top tier NBFC MFIs also. But the structural issues are there, so it's not where it could be, that apart. BC model was a huge innovation. Monsap, you spoke about it in the morning, 2005 regulation. Now tell me a country which has moved in 10 years from the time the regulations came to in second, third, fourth level of innovation. From 2005 having BC networks to 2015-16 having APS interoperable model, and the scale that it supports on ground, there is no parallel to this. No, that's not just a product level innovation, it's a regulatory innovation also. NPCI, huge innovation, again no parallel. Can we imagine who could be a parallel institution across the world? The Western world looks forward to India and is trying to replicate. So it's not just UPI, but now more recent UPI offline, which is probably going to be far more impactful. then UPI. You and I have 4 options. So even if we don't have UPI, we will survive. But the APS and offline UPI makes a lot of a difference. So these are various innovations which are not seen as innovation or leading to impact, but are facilitators which business entities are able to leverage. Within the MFI space, I think not just disbursement, but collection is also happening because of some innovations which have happened outside the MFI space. Various form factors of payment collection and so on and so forth. But these are things that we all know. So this is like a discourse. I would also want to mention what has not worked or has worked suboptimally. Interest rates we've not been able to collectively bring down. On one side we have an SHG model where interest rates are fairly low. The scale of SHG model is as big as NBFC MFI portfolio. But look at the interest rate at one end of the spectrum and the interest rate at the other end of the spectrum. There needs to be a middle path, common ground. This is where at an ecosystem level, I think we need to do more to find how this can be done. And there are various ways that has to come out. This is some area where we've probably not been very successful. Hopefully technology will help us do that, but so far it has not. In spite of the technology, that has not come down. Maybe after the new regulations, I'm not sure whether it will come down. This could go up also. So answer is in the future. Second part is credit and payments have worked very well at an ecosystem level, but there are not savings-led model. Where innovations have proved that this makes business sense. That is still waiting to happen. And third part is perspective from the demand side. The control is still not in the hands of the customer / borrower / beneficiary. It's a supply side model, not just MFI, any form of financial services to the bottom of the pyramid. I don't have many choices to pick from and make my decision. And related to that is the way financial literacy happens. Does it lead to financial capability and how in a sustainable manner? This is something we are still grappling with. Hopefully, again, there may be some answers in technology, but as a package, this is yet to be sorted. And last but not the least, and I'm very hopeful of this and personally passionate about this, is the graduation missing middle. We've cracked the group-based lending model. The formal sector is also at structural level cracked. You have GST, you have P&L balance sheets, and there will be lenders to provide. Even facilitators like Kaleidofin, I see Puneet sitting here packaging this all together, leveraging data and so on and so forth. But for the unorganized sector, who have been a group-based model borrower for very long and still are part of the unorganized sector, that is something we've not been able to crack. And it's not only up to the lender to crack this. This needs a lot of coordinated efforts of a lot of stakeholders, perhaps a PPP model, a facilitator, a promotional role, the lender coming together, and some wholesale structures also being packaged to make this happen. Since we are sitting in Chennai, Tamil Nadu government through TNRTP is trying to put this package together along with several lenders. Indian Bank is one of such lenders who's coming forward to provide financing for the graduation model. The group borrowers who need 2-3 lakh rupee loan, the state government has provided some risk sharing and co-lending facility, which seems to be putting the package seamlessly together besides the facilitation service. These are early days. We'll have to wait and watch and learn from it. But what I see as an insider, at least the elements are well cooked and in place, but now it is for the market players to bring in the efficiency and scale. I'll pause there.
Yeah, thank you, Amit. I think, one point that Amit made, which is very important, we somehow seem to kind of maybe not pay that much attention to it, is that, I remember pre-Andhra crisis, I keep referring to it, but I remember MFIs lining up in front of RBI, particularly even meetings with Reserve Bank of India governor when Dr. Y.V. Reddy was the governor. And he says, oh, you are not a systemic risk. We don't have the time and energy and the capability to regulate you. So we will see you when we really need to regulate you. So today, I think the ecosystem development seems to be tremendous. I think the kind of liberation that happened in April last year, the kind of the small finance banks coming in, I think the technology. So I think the microfinance or the financial inclusion ecosystem seems to be now ahead of the sector. So maybe more innovations are needed in the sector to take advantage of the ecosystem that has evolved and that has almost challenged the practitioners to exploit the kind of ecosystem that has emerged. So thank you, Amit. So yeah, our friend Deepak.
Good afternoon, everybody. Thank you so much for the opportunity here. And nice to see the fact that we now have a Sa-Dhan chapter here. So hopefully we'll see. Other chapters are happening is what I understand from Sa-Dhan. So that's great. It just the power of decentralization has multiple benefits. So
I must say, and this is not only microfinance. The fact that this has broad-based into financial inclusion, congratulations.
yeah. So being the last on the panel, I've had the benefit of listening to all my esteemed panelists and also the challenges that they have highlighted. I'll just list out a few of them and I'll talk through what we are doing at Kaleidofin. Some answers are there. Some answers we are discovering along with our partners. So I think Sadaf highlighted about graduating enterprise loans. He talked about the fact that somewhere in 2010-11 there was a need to set up a bureau, which involved all the bureaus pulling up the data, putting the data in that data center, and then everybody sort of assessing whether a certain borrower was eligible, not eligible, right? Then he also talked about the fact that now we have disbursements in bank account, right? But I think the next challenge which was highlighted was that how do you collect? How do you ensure that those bank accounts are actually used effectively, right? I think Amit alluded to the fact that we have SHGs on one side who are getting lending rates at 9-10%, and on the other hand we have now MFIs after deregulation are closer to 26-27%, which before that was closer to 24-25, and we understand why that change has happened. I think the other point that Amit mentioned was of control by customers. I think that is fundamental, the kind of segment that we operate in. We have templatized in many ways the JLG model, or rather the microfinance model for now 10-12 years. How do we, and generally the technology lay around it has been tactical, which is the loan origination, loan management system, geotagging, cash disbursements. These are all sort of tactical ways of bringing down operational costs. But fundamentally, I think there are a few things that all of us have talked about, right? I think last point that Amit mentioned was lending to the unorganized segment, missing middle, or people who are part of MFI want to move into individual loans. How do we sort of address that challenge? So some of the things that we have done at Kaleidofin are basically, I'll talk about 3 products that we have done, worked on rather. One is our Chi score, which you talked about. I think the use of machine learning, not so much artificial intelligence, but machine learning, right? Almost all MFIs that we have worked with have data, right? But I think what we have struggled with, or rather our MFI partners have also struggled with, is that how far do we go back in the data point? Because of the innovation that have happened, multiple disruptions, whether it is forced by regulation or whether it is by the fact that superior technology is coming into force, the quality of data has sort of deteriorated, or rather the extent of data capture has deteriorated. Having said that, the last 2-3 years data have been fairly consistent. So that's number one, right? The data capture part is what we have looked at. And within the data capture part, I think the way MFIs are capturing data is, of course, almost captures everything, which is basically about the location, about the identity of the customers. They also pull out the bureau data. But somewhere the intelligence was missing. And the intelligence went back to that, went back to the exclusion problem, which Sadaf was alluding to. So we have a bureau which basically tells you whether a certain person is lendable or not based on a certain score, right? With chi-score, what we have managed to do is when we work with our partners, we risk rank the entire segment of the portfolio. And then we allow the decision to be given to the MFI what they want to do with it, right? So when we talk about financial inclusion, our chi-score allows you to truly include all those customers whom we feel are riskier, right? So that's the first thing we did. Of course, there are multiple use cases around it, which includes, we talked about micro enterprise loans. So is there a way that the same customer could be eligible for a higher loan amount? Could that customer, when Amit talked about risk ranking, the benefit of lower interest rate. So with an MFI having access to lower cost of funds, can it start to now stratify its customers and say, certain customer gets, probably 20%, the other one gets 26 based on the risk ranking that based on the chi-score, right? The other product that we have is the Chi Credit platform, which is again referring back to the benefit of interest rate that MFIs can get access to, which allows basically a tech platform that allows that has originators on one side, which could be MFIs or other financial inclusive companies, and lenders on the other side. And they talk to each other through a tech platform, which is, of course, again goes back to the fundamentals of credit underwriting, driven by chi-score. So again, both parties tend to get benefit of that. The strength of the banks is balance sheet, treasury management. The strengths of MFI is outreach, distribution. So both parties focused on their core strengths. I think the other product that we're going to launch in a couple of months is Sky Cash, which is basically a no charges bank account that opens on the instant, right? And basically what happens is that any field officer who goes on the field, he carries a small tab and he's able to open the bank account in an instant for that customer. And on top of that, the customer gets an emergency loan, right? On top of that, it's a bank account that comes with the debit card is sort of given at the instant. And we have, from our surveys that we have done, it seems a matter of great pride when these customers, hold this debit card in their hands, right? And the other thing we talked about collections. At that very moment when that bank account is getting open, and of course all of us are used to it, IDFC did it about 5-6 years back, opening bank account incident, but the collection part of it for the customer is where we actually allow the e-NACH to be set up at that very instant. So the field officer need not necessarily keep going back and forth. And a big credit for that also goes to the fact that now MFIs have managed to develop their own applications. I think Muthoot has, Samasta has, almost all MFIs have developed their own application. So the technology stack is inbuilt for us to build this product proposition for the customers, right? So these are the 3-4 things we are trying to do, and hopefully, all the ecosystem players can get the benefit out of that.
Thank you. That's very, very nice. In terms of, again, machine learning or maybe moving the next level of technology, before I thought maybe in the end each will have a minute. But before that, maybe can we have a quick couple of questions or comments from the participants? Anyone who is kind of keen to make an observation or a comment? You want to pass on? Someone can pass on the mic. Co-lending, okay. Yeah. Putting his hand out. Co-lending. Yeah, maybe what you can do is your 1 minute can be used to also respond to the questions. Yeah, Salim. आ जाता है. Once you talk into it, it'll come. Mm. should give you this mic.
So everybody is talking of how do we reduce our cost. So one of the thing is why not we share the infrastructure or create some neutral infrastructure where everybody can operate that. So this will go a long way in reducing the cost for microfinance and also digitally collecting the repayments. So most of the public sector banks they need to develop in terms of digitalization. One suggestion to them is that like they are giving passbook, they should give QR codes. For loan also I'll give a QR code, for passbook also QR code. You go and to anybody you say you send this money to this. Suppose some illiterate person comes, he shows I want to send this money, maybe you can send using this QR code. So that way these are the innovation, small steps. Just like NPCI, it revolutionized the whole system. Similarly, this is something maybe NABARD and others like commonly, like now they are doing core banking solution for cooperative. So such technology, because the cooperative are individually not affording to do that, NABARD came forward because it is a social and national infrastructure. So for repayment also, for micro loans, such infrastructure creation will go a long way in reducing the cost. No, infrastructure, common infrastructure. Like NPCI, the shareholding is from all the banks. Why not all the microfinance?
There are lenders who are using the BC network for collection.
Yeah. Sure.
But what he's saying is that instead of everyone going into the same village, can they have a common collection? Can one person? This was like if IIFL brought together after the crisis to set up a credit.
Give at least one mic. There's one in the back. That would be the last question. Yeah, that would be the last question.
QR code in our iDigital card. So you don't need to have full the details. So there is a QR code. You just scan and we'll try. We'll formulate that. We'll formulate. Yeah.
Yeah. Very good afternoon to all. So I am taking. Yeah, I will take only 1 minute, sir. So I am taking from the subject, from title itself. South India shows the path. Really, whomsoever is sitting in this room, whomsoever is representing from North, I don't know. But most of the North-based entities are started with South stuff only. That is the real innovation has happened after 2010 crisis. Why? Because there is no expertise there in ground. I'm not talking about promoters, I'm not talking about the investors. People whomsoever is working in ground in North, they learn the microfinance from Southern staff only. How many people will agree, not agree?
Okay.
I don't know.
No problem. Thank you.
Second point I would like to raise here. Whatever the credit discipline used to follow in Southern states, same is replicated in SFBs and banks. Banks are started this BC model from South only as per my knowledge. Since I am into this sector from past 27 years, so I traveled all over the country. So I understand that entire microfinance path is started from South only, South staff only. So this is my strong opinion.
Thank you very much.
Thank you, sir.
I think Gigi, they're also all saying the next year national conference should be in Chennai. Rather than why should national conference be always in Delhi? Why not in Chennai, or why not in Hyderabad, or why not in Mumbai? But I think, in terms of questions, we are done, so I was just planning to give a quick one bite for each of the five, just if they want. Yeah, 30 seconds. Anything else, in response to the comments, or anything else that you have been wanting to say?
So final comments that one for MFIs, rightly said by the gentleman. So the foundation has been started from South only. So we'll follow that path. We will follow that, and hopefully, we all look forward to take the credit discipline. That is the most important aspect.
I think the good part about this, what we heard from the audience was not the questions but the suggestions. So I think there are a lot of innovations that can happen, and they're happening. I think the aggregator kind of framework is one big piece which will really help us kind of understand the borrower, underwrite the borrower, and I think that will take the financial inclusion to the next level. That's what I feel. And I think from the impact side, since you asked the question, I can tell you that microfinance as an institution today, being a 3 lakh crore book, serving 6 crore households and covering almost 12 crore life, has really made an impact. And I'm sure this will, like Salamat sir said, that the infrastructure for taking the rural services to the last mile, I think that role microfinance can play, and it is already playing. I can tell you about one innovation, which is an e-clinic. We have partnered with them Ensure. We have in our branches e-clinic where customers are getting consultation, a doctor's consultation, an MBBS doctor's consultation at the doorstep or at the branch itself. So I think those kind of innovations are really making a deep impact, and I'm sure more innovations will also impact the society.
Thank you. Yeah, please. 30 seconds.
I mean, in terms of innovations, I mean, we have seen it at every, I mean, whenever there's a need, definitely there's an innovation. But if you look at externally and internally, I think so there could be a collaboration in terms of innovations. And I think so we are all moving in the direction, and constantly people are, I mean, any organization, we are looking at things of how we can make more innovations through impact, and which can bring about a big impact. So, I mean, most of us are working towards that, and hope this apt subject for this panel discussion actually fructifies. Thanks.
Thanks. So I'll pick on your co-lending part very quickly. So that's definitely an innovation, not just in terms of the instrument structure, but because it allows public sector and private sector to come together, and that's the power of that instrument which will unfold. Not just loanable funds, but there is an example of co-lending model which Sa-Dhan paper briefly mentions about TNRTP, where government is providing grant funds also through a similar structure and a partial risk sharing. That's something probably will have more lessons for us to see. But I'll just leave one thought with you, where I think we can create a more a larger pool of customer base and market if a regulatory arbitrage can be plugged in. Today, SHG members' transaction/credit history is not available. Through digitization, if the transactions between SHG and members happen through the bank accounts, this will fill the regulatory arbitrage, and there will be more cohesive ecosystem, which we should try and do.
No, but he's saying now
that's
we can even
that's
go
more
beyond.
about the bookkeeping part. I'm saying the payments that should happen. If
He's saying
payments
go
happen,
beyond.
we can go beyond bookkeeping and build that.
He has a mic. You have anything to say?
Yeah, just I think what I forgot to touch upon was the lending to unorganized segment, which is the graduating loans. So I think, and basically people where we have what we call as new to credit, or there is no digital footprint also, right? So based on the data that we have consumed from multiple partners, we are able to build now personas of people who don't have credit history at all, but have some level of demographic input for us to assess whether they are lendable or not. So that's an innovation that we are pushing for.
Good. I think.
Just one sentence. We need to have credit scoring for SHG members.
Yes.
SKDT is already tracked to members, but we don't have
Even Srinidhi does, by the way.
we don't have a credit scoring mechanism.
I know, yeah. We need to do that. So thank you very much to all the wonderful, young, bright panelists. I have just two takeaways from this discussion. Number one, in spite of a very strong enabling ecosystem, I think we are still maybe 10, 20, or maybe 20% of what is the demand. I guess the microfinance or the financial inclusion demand. We are talking about 3 lakh crores of MFIs, 3 lakh crores of SHG bank linkage. I think the requirement is maybe at least 3 times, 5 times more. So I think somehow as a sector we seem to be not really aware or thinking about what's the kind of demand. Second, I think that everyone mentioned technology and the machine learning, artificial intelligence, we need to take advantage. But I think there is also a message from this Sa-Dhan conference, Sa-Dhan also being an SRO. Can they also work together to optimize human resources and perform better and then bring down your cost of operations to much lower than maybe what it is currently? Thank you very much, and we conclude there.
Check. Thank you so much, gentlemen, on the stage. I think this session was more about new idea sharing, perspective, and a lot of information. Give them a big round of applause. I now request Ms. Srimati, Executive Director, Indian Overseas Bank, to join us on the stage and felicitate the gentlemen on the stage. I request you to felicitate Mr. Sadaf Sayeed, CEO, Muthoot Microfin. I request you to felicitate the moderator, Mr. C.S. Reddy, MD, CEO, APMAS.
Thank you.
I request you to felicitate Mr. N. Venkatesh, MD, IIFL, Samasta Finance. I request you to felicitate Mr. Amit Arora, Senior Rural Finance Advisor, World Bank. I request you to felicitate our speaker, Mr. Deepak Srinivas, EVP, Kaleidofin. I request all of you to come forward for a group picture. A photograph, ma'am. I'll be there in the next batch.
Thank you.
Thank you so much.